Hi, it's Jack from Alphacharts with a state of the market video. Today is March 29th, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, thank you all for watching this video. If you haven't done so, please like and subscribe to my YouTube channel. It does help me, and I would love to see some more subscribers jump on there. So thank you very much for doing that right now. A couple of quick announcements. First one is I use Deep View for all my charting and scanning. I would say 99% of it. And right now, I've partnered with them to give away a free year subscription to enter to win. All you have to do is go to X at AlphaCharts365 and like and retweet this post. Follow me, which a lot of you already do, but if you don't yet, follow me on there, and then also follow DeepView. If you do those things, you'll be entered to win. And Sunday, I will be picking a winner. So you have a little bit of time, but not too much to get in there. So again, at AlphaCharts365. And if you like my stuff on here, please don't forget, I do run a subscriber service. I mean, honestly, for $10 a month, it is a no-brainer. I do the work for you, and then you just get to evaluate it and decide, does it match what you want to do? It gives a differing opinion. It gives you setups. It gives you all kinds of midweek videos and market notes and things to keep you engaged in the market without you having to spend the hours and hours and hours that is needed and years of experience to get all that kind of information. Again, it's $10 a month. Really the best deal out there for any subscription that I've seen. And the great part is it's month to month. So you like it, you keep it. It doesn't help you anymore. It doesn't, or just doesn't jive with you, right? It's fine. It could happen. Unlikely, but it could happen. You just cancel it, and it's no big deal, right? So check it out again at AlphaCharts365, and click that subscribe button. Okay. Let's get to these charts. All right, so we have the SPY starting here, and again, we talked about it coming out of this big cup and handle. Again, cup and handle isn't. I'm using that terminology loosely, but it's more about the psychology of the market and the base than anything else. And if I put fibs on there, about 546 or so, we'll call it 550-ish. That's the first place where we may enter some, extension of selling, extension, and we may find some selling showing up there, and then around 600 or so, 610, something like that. So those are the two places on SPY that we may encounter some major selling. Again, on the weekly chart, it's been really just a big march up, right? There's been almost no selling since the November low, right? That's been amazing. So, oh, and what was that on the week, by the way? We were up 0.36 on the week. So, just kind of a little sideways chop on the week, but nothing, nothing bad and still in trend. Again, that's where I'm looking at right there. So, looks fine to me. RSP, it broke out, a little retest real quick, broke out, another little retest, and it's moving higher. The week was up 1.64, shows you the strength and the breadth of the rally. Again, super strong. Everything looks really good in that on RSP world. That's again equal weighted SPY. Looking at the Qs, they were actually down 0.5% on the week. And if you really look at it, look how it's really gone sideways for 1, 2, 3, 4, 5 weeks now. We've had really a sideways type of market. Again, it's down 0.5% on the week, and you kind of see that sideways market right here, right? From here to here, it's been basically just sideways. Moving averages are catching up. So the good news is we're going to get resolution, right? Whether this is just a consolidation within the prior uptrend, and the resolution we would expect to be higher. That would be great. And if it's not higher, then we're going to be breaking or at least testing these moving averages actually rather quickly. We are only, or it is only 2% above the 50-day moving average. That's not very much at all. And when you go back 50 days, Let me just go back 50 days from here. And 50 days would be right in here. So as we take out this week coming up, this data, right? And if price doesn't move higher, we're going to start to get a flattening 50-day. And also, you see the 9 days already kind of flattish. The 23-day is starting to flatten. So again, just a sideways movement, 2% above the 50-day. That's something I'm watching. Nothing to do because the expectation is we move higher from here. But if there's an expectation breaker and this goes below 434, that's a different story, right? On the equal weighted, again, we're back up to this general area. Nice rounding bottom, and we'll see what happens there on the week. I always like to look at the week here. Again, so it was up 0.38. So it shows you how the cap weighted Qs were underperformers by 0.5%, right? Down 0.5%. Yet we had the equal weighted up 0.38. So there's a divergence there, right? And that's okay. We like that because equal weight means that people are just kind of rotating out of some of those mega caps, but they're not like throwing everything away. They're buying other technology companies, just not the gigantic ones, right? Let's look at mid caps. One of my favorites, man. Let's go back to the weekly. Here's mid caps. Beautiful breakout, move higher, up 2% on the week, right? Which followed up another 2% in the week prior. Beautiful breakout. So I think mid caps are a place where we see some continued strength, right? We've had strength the whole way, and it's continuing up 2% there. And then IWM was up 2.53. Again, continued strength, a little wobbly like in this area right there, but overall did nothing wrong. And when we go to the daily, we are going to show you how it kind of held the 50-day. And it has been very respectful of that 50-day. And now it's breaking out and breaking higher. Again, it may not be a straight path up, but I think we hit this 233. And I think things are looking good, right? So we're seeing that rotation out of those mega caps, and we're seeing equal weighted products do better, outperform, and money is rotating in some of the fresher names. That's the way I'm reading the market at this point. Let's see if the ETFs are telling us anything different. Financials breaking out to all-time highs, right? That's no other way to put it. That's bullish. Bullish. And at 1.7% on the week. SMH, okay, down 1.16. And notice how it's been 1, 2, 3, 4 weeks, within basically a range. We had this kind of give back right there. And you can see I changed my background. There we go. Is that it? You know what? I'm not going to do all this on here right now. But yeah, we were hitting a Fibonacci extension right here. And actually, what I probably should do is make my life easier is just, it didn't do it. All right, it's fine. It's a Fibonacci extension. And, you can see it as I put these back in. You can see how it's those are the ones down there. And then we're going to do the ones. There you go. And I want to do it 2 as well. Okay. So it just kind of shows you we hit this fib extension. It's just consolidating. I don't look at this as anything but that at this point. But it does show the rotation out of the maybe the larger cap semiconductor names. Again, it may just be a consolidation within the context of an uptrend as well. We have not broken any major moving averages. So to kind of get a feel of it, let's look at the XSD. XXD is the equal weighted semiconductor index. Now we see it was up 2.48% and emerging from a base. Now let's go ahead and look at that compared to the SMH. And you said SMH was down 1.16% and is extended. So what does it tell you? Again, if you want to start positions, we want to look at things that are in the maybe mid-cap semiconductors, right? I mean, that's how we're going to put some of this together. And that's how we kind of formulate theories on what may outperform the market. And, This is part of the process. This is why I do this every week. And, I do it for me and I share it with you. Right. So, but you see XSD emerging from this base looks really, really good. So that is something that I'm interested in, right? Um, sorry, I'm just looking here. Perfect. All right, so then that's XSD. Let's look at ITB. So this is the housing, home construction. Again, really strong, up, consolidation, broke out again, all-time highs, up 1.77 on the week. Looks great. XHB up 1.24 again, just looks really, really good. Looking at transports, look at IYT first. IYT was up at this resistance area. Again, I'm saying on the weekly charts, because these are getting really big, and so weekly charts will clean up a lot of the noise. Back to the scene of the crime, basically here. Actually looks pretty good for a breakout, right? So we may see some transports really start to come out. So this was the cap weighted. Let's look at the XTN. The XTN is going to be the equal weighted transports. And look at that. Again, another equal weighted product outperforming its cap weighted counterpart. And that's interesting. That's great information because it's showing you how, again, rotation to those mid caps, small caps, and mid caps are continuing. And that's what that's telling me. That's the information is feeding. So really positive for the market. It means that we would expect breadth to be expanding even if we see the Qs churning, right? Qs are churning. SPY, which is doing better than the Qs because, again, it's a little bit more broad-based, not churning. Again, for me, it has I understand that story, that line of thinking. Looking at the VIX, I was talking about this being an expansionary look to it, which it was, but then it went down lower, and that is a positive expectation breaker, right? Or actually a negative expectation breaker, really. It's at 13. I think we're still in a bullish range, which I've talked about, especially if we're under the 16 and a half. That's my line in the sand for that. And it's absolutely fine. So we look bullish on the VIX. Looking at credit spreads, we look tightening and bullish on credit spreads. And we can still go lower. Don't think that we're like, oh, we're too low, we have to bounce, whatever. I don't think we're quite there yet. So that looks absolutely fine. Looking at breadth, percent of stocks above the 50-day, expanding again. Again, that's surprising. I was expecting it to come down here. It still may, but it may come up here first, right? Breadth expanding, that looks really, really good. Let's look at the put call ratio. Put call ratio. Okay, so this is interesting now. We're starting to see maybe some bearishness pop in here, right? So we saw it here. Now we're seeing it here. I love that, man. I mean, there's nothing bearish about any of these charts, yet people are starting to get bearish. Like maybe they know something we don't. That's possible, right? But that's really interesting. I wonder what the bar. Look at that bars, yeah. People are like, I don't know what they're thinking. But that's good information right there. And then sometimes I show this momentum has really been choppy. And so if you haven't had much momentum since, really the beginning of the year, I think this McClellan oscillator shows it very well on why you haven't. It makes sense. But we are seeing new highs outpacing new lows, and that's very positive as well. So we'll share all that with you. What else am I going to share with you? Dollar, DXY. So here's the dollar, and I'm going to go here. And so we have this major trend line. Again, it's line of best fit. I could arrange as many different ways, but this is line of best fit. And so we have the breakout here, and now we have a little pullback, kind of right at the trend line, right? So it's gonna be really interesting. If this breaks higher, it may make it harder for stocks. If it breaks lower, I think it'll be maybe a little bit easier for stocks, right? So we're watching that quite a bit. Let's just kind of wrap it up. I think that things right now are looking so far for the near term, short, intermediate term. I think things are looking absolutely fine. We talked about the rotation. This is a chart. Let me just do this chart real fast, and I'm gonna XLK versus SMH. Okay, this is on the monthly. No, not XLK. I'm sorry. XLK versus SPX. This is the chart. And you see how I talked about it, technology, especially big cap technology coming up here and potentially underperforming the market. Doesn't mean it has to go crash. It just means underperforming for now. And this is, part of my thesis on why we would expect a rotation into, or at least out of, the technology names, and we should be looking at maybe financials, maybe energy, and some of the less loved sectors coming into this year. I think that theory has played out as well. So if you like this type of analysis, check me out, at Alphacharts 365. Join the group. It's only $10 a month. It's really not much money to give it a try. And if you don't like it, that you're out $10. That's it, right? So it's a great reward to risk. And if you don't do that, just don't forget, follow me on X, and but subscribe. All right, guys, have a great day. Talk to you later. Bye bye.